Hi guys, I thought I would make a quick video about SoFi because all of these, I don't want to call them investors, but YouTube gurus are hyping it up. Past days they are going crazy just because the momentum is favorable for the stock.
Everybody should own 100 shares of SoFi. And I said, why, Winston? He said, well,
Just own it.
the numbers, do the maths, and it'll become perfectly clear. And I said,
Oh, okay.
let's do exactly that. And I'm going to break it down for you, golden retriever style. So this isn't financial advice. This is puppy advice. Simply at the expected profit growth of SoFi this year, 125%. Next year, 205%. The year after, 115%. 57%, 33% for each of the years going forward. Looking at that, is it unreasonable to expect that the stock goes up? I'm bullish on SoFi.
So there you have it. All a company needs to go up is for earnings, for revenue, all of that, yes, to go up. It's so easy. So let's go over the risks. If you didn't realize this and you own the company, you're basically shooting yourself in the foot because now you don't know what to do, if you're going to sell, if you're going to hold, or yeah, if you're going to buy more at crazy valuations. So we're looking at it at 15.7 SoFi. This is how I have used SoFi. You see, I've been buying at 6.4 and selling when it gets close to fair valuation. And I've been doing this the past, it's just past year. But so you see, I bought it twice here, made 20%. I bought twice here, made 17 and 8%. And this is nothing compared to what people have made now because it's gone up, okay? But 3 hours it's going down. So let's talk about the risk. Because all of these people like push the narrative that this stock can only go up. You see? Only up. 100, next point. No problem. Well, here comes the huge risk. Landing is 57% of total revenues. And the problem is it's unsecured loans. So they don't have anything to back up the loans. And this is 396 million of what is the total? Somewhere about 750 or something. And you see the leading segment, which is including personnel, achieved a record adjusted net revenue of. So they keep beating on the loan side of the business. And this is not what you want as a SoFi investor. You actually want the services, which is a really nice part of the business, to explode, because this is less risky and this is less risky. And then you have the high risk, which doesn't have any backing. Basically, if something terrible would happen financially, if people stop paying, say they need to buy food instead of paying this, SoFi doesn't really have any leverage to push people into paying the loans. Say they can't go and say, we're going to take your house. There is nothing behind the loans except like a handshake. So of course the members are jumping in because it's free money, and impressive growth, but it's slowing down a bit. Still impressive 35%. And I think that's the big upside is the members, but I want them to go from the lending into financial services. So you have a very high valuation, basically twice what the company is worth. And on top of that, half of the business is a very risky business. So they are exposed to high risk. And I feel a lot of people are ignoring this high risk side of the business. You see, lending products are growing 19% year over year, and financial services growing 33%. And this is what you want to see. But the problem is, at the moment, financial service is the lower part. And as you see, the stable one is actually the lending. And that's also a problem. See, the past, what is it, 3 quarters, it's been close to 20%. And if you see the financial services growth has gone from 50%, 45, 42, 39, 33. So you don't want it to decelerate the growth in financial services. And this is my issue with the company. And that's why I don't want to own it for a long term. And the second risk, you can't really look it up like this, but the second risk is it's a fintech combined with lending platform. So of course, with that, you have the issue of regulatory risks. So on top of that, you have security risk, you have regulatory risk, and then you have the 57% of revenue is from loans. And I want to highlight this when the stock is trading at these high valuations. I want to see it trading in between 8 and 10, but I know the CEO wants it to go to 24 because that's his next payday. I think 12 was the last payday. And when it reaches 24, the CEO will get another package. So it will be interesting to see if it reaches 24 or if it corrects because people actually realize this is a risky business and why are we promoting this as a safe, good long-term investment? But these YouTubers, they just want the short-term click my video. You see, one day ago, Palantir and SoFi shareholders get ready. Oh, it's gonna explode even more because it's gone up in 3 months. But if you look back, most people bought here and now they're even or even they're still down because long term this is a good company, and then it's not backed by anything, and then you have regulatory risk, and then you have regulatory risk on the fact that they are designed as a bank and they also are a fintech company. So you have two areas of where regulation could mess the future up, so to say. Very hard to describe. I would say a third one could be as well. Let's see, actually. Okay, so you have the risk of getting diluted. Total shares outstanding, was it 975 to, that's like 10% dilution. Free cash flow per share still negative. So they will keep on diluting you. Quite a long, but they're making progress, so to say. From 2022, it looks a bit better. But I would still be worried as a shareholder. Like, they have so many risks involved with this business model. How is goodwill? What the hell did they buy? What is SoFi buying that is so important for them that they're willing to pay 1.3 billion? I would check out these. Like, I'm not concerned about the long term because I'm not holding this company, but I would check out these. What actually happened? What they paid goodwill for? This is also a concern with Tesla. Elon Musk is famous for buying his brother's company and basically saving his brother out of bankruptcy. Stuff like this actually makes me a bit 1.3 on an unprofitable company that has a very high risk business model with half the book value in unsecured loans. Do you call it unsecured loans? Unsecured purchasing loans, personal loans are approved. I'm not a loan expert, so I'm not a financial expert either or anything, but I like to believe that I understand more than these guys. And the problem is these guys will look like geniuses just because the stock has gone up. They only care about the potential upside. If they lose all their money, they will just stop posting about it. Gosh, he makes so many videos about the same stock, or like every day, like 5 videos. But he's actually like a pumper. Here's someone calling him out 1 year ago. Maybe he deleted the videos where he bought. Okay, so he bought it at about fair value, or Where did you buy it?
Stock has been leveled this year, leveled down 56%. Okay. Before I get into the numbers and things here with Google or with PayPal, like why is it so many of these NASDAQ companies have been absent in all the developed world? They own PayPal in.
Okay.
I believe PayPal is going to go on a pretty beast run over the next 2 to 3 years. I think the stock price is going to double.
I think I will see like 115 maybe. I bought at 58 and I'm gonna hold it until I retire. I'm not overpaying like him, but yeah.
Up, if not triple up over the next few years. And
so he said it's gonna triple up over the next few years. And this was 2 years ago, so triple up. So we're looking at 200 plus today. That's delusional. Okay, I just want to say that that's delusional.
The stock's going to be
and I have like 70% of my money in PayPal. This is delusional.
$200+ stock again, and people are going to be like, "Holy smokers, this ain't no joke."
No, it's going to take maybe 10 years to get to 200. 5 to 10 years. It's not going to be 3 years like he said. I think maybe 2035, 2034, we might see something like that, but I'm expecting 10 to 15% every year, slow growth, safe growth. I don't want anything explosive. I don't want him to pump it, because if he does, I have to sell, and I prefer to have the company grow and eventually pay me a very fat dividend for the shares I hold, rather than having to sell it and pay tax because it's overvalued. Because, yeah, hype. But I don't think PayPal will be a hype stock. Please don't. I don't like this. We're gonna add volatility to companies. It's silly. All of this is silly. Have a nice night.